Hello, everyone. Thank you so much for joining this month's Lunch and Learn webinar. Today we are covering gifting to persons with disabilities using an ABLE account, which is perfect just in time for the holiday season. Today's presenter is Michelle Fuller. She's the owner of Michigan Law Center and president at Advocacy Inc., which is a nonprofit organization that administers special needs and settlement trusts. She has been a special needs planning attorney for 25 years. She's a published author and the 2018 recipient of the Unsung Hero Award given by the State Bar of Michigan. This video is being recorded and will be posted on our YouTube channel. And if you have any questions, you can drop them in the chat throughout the presentation. So with that being said, Michelle, you can begin.
Okay, thanks, Maddie. Appreciate it. So welcome, everyone. Thank you for joining us. And so we thought when we're thinking about content and what people are looking for, what they're curious about in the world of special needs planning, as Maddie said, it's now December. This is the season of giving. And so this also, though, applies because we give gifts throughout the year, whether it's birthdays or some other special event, not just at Christmas time, but of course, most importantly, during Christmas time. And so I just wanted to make sure that people knew how they could properly make a gift to somebody who is a person with disabilities, right? And so especially if it's a cash gift or instead of gift cards, why? Because if they are on any kind of government benefits, you may unwittingly be disqualifying them or reducing their benefits. And so I thought this would be a good webinar. So we'll be taking questions throughout. Go ahead and drop it in the chat. And Maddie is going to just raise her hand or just, ask questions as they pop up. So go ahead and feel free to do that. So what are we going to talk about today? It's basically, I love using the ABLE accounts. ABLE accounts are some of the most valuable tools that we have as both a parent of a child with disabilities, as well as when we act as trustee, because it gives agency and the right to make decisions to someone who sometimes isn't able to do that, especially if their money is in a special needs trust. They don't have authority to actually use that money and spend it very freely. And this is a way that we empower people to do that. And so we're going to go through the history of the ABLE accounts and some of the features. Of course, we are a Michigan-based firm, but there's also national resources, and ABLE accounts are available throughout the country. And so we want to make sure that people are aware of what an ABLE account is and how to use them. So first, the ABLE Act. It comes from Achieving a Better Life Experience. And what are they? They are basically built on the 529 College Savings Fund platform, which means, this came from a grassroots organization, a grassroots effort by parents of children with disabilities saying, look, I can save for college for my neurotypical child, but why can't I save in a compliant way for my child with disabilities? This is crazy. Why can't I do this? And so through this grassroots effort of parents, this came into law, and President Obama signed it into law in 2014. And so, like I said, this builds on the 529 College Savings Fund Internal Revenue Code platform. And so for those statute geeks out there like myself, it is Internal Revenue Code Statute 529A of the IRS code. And what it does is it's a safe harbor so that parents and loved ones of a person with disabilities can set money aside for them that they can use. We'll go through how to use an ABLE account, but there are some key characteristics of what this ABLE account can do for an individual. And so one is they can save money in a tax exempt and government benefit exempt account, and it grows tax free. They can use it for anything that helps make a difference in their life. That is a qualified disability expense, or QDE for short. Government and their acronyms. Everybody loves an acronym. The purpose of an ABLE Act or the ABLE account is that it was a way for someone who has been determined to be a person with disabilities to be able to save money. To be compliant and to remain eligible for government resources, an individual must meet two tests. One, they have to meet the medical definition of disability, and two, they have to be poor. And so usually it's low income, below the federal poverty limit, and low resources with less than $2,000 in countable resources. So that term countable resources is really important because there are countable resources like cash, and then there's exempt resources like an ABLE account, a home, one car, or other, piece of transportation, um, and a prepaid funeral account. That's it. A special needs trust is also an exempt resource, and we'll go through some more details on those. And so part of this was a recognition on the part of Congress that someone living on government benefits is not going to be living terribly well. Government benefits were never meant or intended to meet all the needs of an individual. And so the income level is very low. And we'll go through some of those things. They also recognize that the cost of raising a child with disabilities can also be significantly greater than that of a neurotypical child. The housing could have very specific needs and need modification, which means investment in dollars and capital improvements in a home to make it accessible to someone. That goes for transportation as well, whether it's a lift or a larger vehicle or any other type of additional insurance, maintenance, access. Those costs are higher. There's not as many options out there. Certainly, caregiving services, personal assistance, assisted technology, that type of expense. And also, there are other types of services, whether it's private healthcare services, additional therapy services, things that are not covered by insurance or Medicaid. So the benefit of an ABLE account is basically that income earned inside of those accounts is not taxable. It grows tax-free, and which is huge, right? It's a huge, huge benefit. They're also protected so that it helps someone to set money aside that will not disqualify them from government benefits. What benefits we are really talking about is Social Security of a certain kind, supplemental security income, and Medicaid. So for SSI recipients, they do have a maximum value in the account that before it starts impacting their eligibility. So if you are on SSI, the maximum amount that you can have in an ABLE account and still remain qualified or eligible for SSI is $100,000. Now, given the amount that you can put in every year, it would only take around 5 years to reach that limit. If you're maxing out your contributions every year, you're not using the money, you could hit that limit at around 5 years. So be careful of that. But if you're Medicaid only in Michigan, so let's say you're on Social Security Disability or SSDI, or you're a DAC or CDB beneficiary, meaning childhood disabled beneficiary, and you're not on a means tested Social Security benefit, but on Medicaid only, you can have up to $500,000 in an ABLE account that continues to grow tax free, and you can reach a level of $500,000 before it starts affecting your Medicaid eligibility. Now, people with disabilities doesn't mean that they can't manage their own money. Disabilities are of all kind, and so doesn't mean that if you're physically disabled, that you have any kind of mental impairment that would prevent you from managing your money. And so this is a way to allow people to self-administer, self-manage money, and yet remain compliant with government regulations for SSI and Medicaid, which is huge. It's a huge leap, because with other types of planning, like a special needs trust, the individual with disabilities cannot own or manage at all that money. It must be completely separate from them. And so this was a big breakthrough. The ABLE account does have some eligibility requirements. One, you have to have a disability. You have to be eligible for SSI or SSD, or be able to self-certify that you are a person with disabilities. So in a nutshell, this means that you just have to meet the medical eligibility requirement through self-certification. You don't have to be a current recipient of Social Security disability benefits in order to open an ABLE account. That is a huge distinction, because not everybody that might qualify for those benefits has applied for them. Doesn't mean you shouldn't. It just means that it's not a barrier to creating an ABLE account. And the current rule is that the disability must have manifested prior to age 26. So that's a really important deadline. So again, it doesn't mean you have to necessarily be formally diagnosed. So if you have something like autism or some other type of condition that is clearly manifests at birth, then it's something that you need to, then you can self-certify, even if you're not currently on benefits. So the process for doing that is that you have to swear under penalty of perjury. There is an IRS form to be able to do that. And so you also have to have a doctor's letter confirming that the disability manifested prior to age 26 upon request of the IRS or even Social Security. Then you have to provide it. That being said, to date, I don't personally know of anyone who's received that request from the IRS or Social Security Administration. You just have to self-certify. So it's an IRS form, and you just have to sign it under penalties of perjury, and you should be good. What is a qualifying disability? If you're a minor under 19, blind or disabled under SSA, or if you're over 19, you're blind or disabled under the Social Security Act, and the disability occurred prior to age 26. However, the big headline here is that provision sunsets as of January 1st of 2026, the age of onset moves to age 46. How did they pick age 26 to begin with? How did they pick age 46 to begin with? Nobody knows. It's just kind of arbitrary. It doesn't make any sense, but that's just what they did. So I think what they did is they went 26 to 66 and split the difference and said, okay, age 46 is the new age of onset, starting January 1st of 2026. So this means that so much of our practice is focused on providing guidance and counseling and legal advice for people with disabilities, whether it's their family member or themselves, because of a personal injury settlement. And so a lot of our cases, a lot of people are not eligible because of this age 26 onset requirement that will completely open up after January 1st of 2026. So we only have one more year to wait. And I think that the field of eligibility will drastically expand. The Social Security definition of disability for an adult is that you basically have a physical or mental impairment that will last at least 12 months or result in death, and it prevents you from performing substantial gainful activity. So substantial gainful activity, or SGA, is a common acronym that you will hear. SGA is basically, can you work and support yourself and earn less than roughly $1,500 per month? That is a very low bar. That is not working full time. Or if it is working full time, I don't even know if that's minimum wage. If you work full time at minimum wage, I think you would exceed that. So it's a very low threshold to meet. And so it's not work in your chosen field. It is any work that's available. So the standard is it's a very high bar. And so I think it's important, though. And one of the things that we talked about in a different webinar was the fact that, this is an area that a lot of parents miss, that they don't apply for their child, or child who reaches age 18, they miss that opportunity. They wait a long time before applying for benefits. And I think that that's a really common mistake. I think that benefits really, if they're eligible, they should go after these benefits. So that's the SSI definition of disability. For a minor, the definition of disability is a little different because we don't expect minors to work. There's no mandate that they work. And so having a child qualify for disability, the definition is that they have a mental or physical impairment where it impairs their development. It's a substantial impairment of their development, as a child would. And so that threshold, that maybe they meet that threshold as a child, but they won't as an adult. So it just depends. But does that mean that if you have a doctor's letter, I would consider opening an ABLE account. If you even think potentially that your child would qualify, then I would move forward. This is a great tool to use. So how does one manage an ABLE account? So we'll go through the establishment a little bit too, but mechanics of an ABLE account, I think, are I personally have one for my daughter who has disabilities, and I actively manage it. And so I have hands-on experience, not just from clients, but from a personal level. And so ownership of the account, it must be under the name and social security number of the person with disabilities. It cannot be, a parent can open it, but all the information about who the account owner must be the person with disabilities. The contribution must be in cash, so you can't transfer stock or any other type of appreciated asset. It's cash only. Unlike a 529 plan, a 529 college savings plan, someone can have multiple accounts. For ABLE, you can only have one. So that includes, you can't have one in different states. You can only have one. There was one account allowed per person, and some state, these are all state sponsored, right? And we'll give you resources for those. But to establish a Michigan ABLE, do you have to be a resident of Michigan? No, you do not. Different ABLE programs are subsidized by the state. And so then those tend to be states that require them to be a resident in order to be a member of their ABLE plan. How do you fund an ABLE? Well, the maximum contribution is tied to the gift tax amount. Again, I have no idea why. There's no significance. I don't understand how these things are related or why the government created this rule in this particular way, but they did. And so they tied the maximum annual contribution to an ABLE account to the annual gift tax amount. So for this year, it is $18,000. That is the most that you can put into an ABLE account in 2024. And so the ABLE accounts have a mechanism where they won't let you overfund. So if you're trying to make a gift to somebody, they won't allow you to overfund it. So this is being recorded in the beginning of December. So you have the whole month of this December to maximize an ABLE account contribution. And I would invite you to do so, especially if you're really charitably minded or generous and you want to give to a person with disabilities. This is a great way to do that. As of January 1st of 2025, that threshold increases to $19,000. So what if you started a 529 college savings account for your child and they're not going to really, this is going to interfere with public benefits? A 529 college savings plan is a countable resource once they turn 18. And so rolling that into an ABLE account, can you do that? Yes, you can. Absolutely. There's no penalty for doing so. There's no tax consequences on a 529 plan. Because usually if you're not using that 529 plan, the college savings account for education-based expenses, there's a penalty. And so are we using it for education-based expenses? No, we're rolling it to an ABLE account, but they have eliminated, there's no penalties for that rollover, but you are still restricted to that annual maximum threshold. Again, 18,000 this year, 19,000 next year. There is, though, also additional funds that a person with disabilities, if they are working and they have excess funds and they want to have additional savings set aside, they can put an additional, this year, 2024, that number is $14,580, which then increases to $15,060 that they can put in on top of that $18,000 or $19,000 threshold. And so that's quite a bit of savings. So that is great, except keep in mind those countable asset limits. So again, it's $100,000 for an SSI recipient and $500,000 for a Medicaid only recipient. So what happens if they go over? Will the ABLE accounts allow you to go over the $100,000 threshold or over the $500,000 threshold? They will. But what happens is that your eligibility for those government resources is suspended until the funds are spent down. Medicaid is not lost during that suspension, only SSI. And so the Michigan 529 plan limit, again, is $500,000. And so that may vary across. If you're not in the state of Michigan, check and see what your state 529 cap is. That is the same cap that is a Medicaid only cap that would apply in your state. And so what can you do if you're fortunate enough to be faced with that dilemma? One, you can spend the money, spend it down, buy stuff. Or you can make a distribution to a special needs trust and make sure you keep below that threshold. So that's two good choices, right? Spend it or transfer it to another exempt resource. Tax treatments, everybody loves tax discussions, but not I don't, but I think it's worth a mention. So the funding of an ABLE account is with post-tax dollars. You cannot put qualified money. Again, remember, it's cash contributions only, so there's no qualified money that can go into an ABLE account. Some states do offer incentives and tax deductions for contributing to an ABLE account. Again, this is really important that there are investment options within the Michigan ABLE account. Now, it is not necessarily clear or super easy to necessarily navigate, but there are investment options where you choose the level of risk that you would like to select, from very conservative growth to very aggressive growth if it's going to sit there and you can tolerate the ups and downs of the market. You choose your risk tolerance and then the amount that you want to keep in cash. And so it works on percentages. So for every contribution, let's say there's $1,000 that's going in, you may say, I want 10% of that in cash, just available cash, and then 90% of that contribution to be invested. And this is the way I want it invested. So you can do that all within the ABLE account platform. And you just have to follow the prompts. And it's something that it's not super clear, but it is findable. You just have to poke around a little bit. Distributions for qualified disability expenses occur tax-free. So there's no income tax for the growth that accumulates in that account, and you can use it for any qualified disability expense, QDE, and we'll go through what those are in a second. And so what if you don't use it for a permitted expense, for a qualified disability expense? You just do something else with it, like put it in a brokerage account, right? Which was a great question that was asked. And so what happens is that it's subject to ordinary income tax plus a 10% penalty. And so the income tax level would be, again, the person with a disability, but then there's that additional 10% penalty. So, nobody wants to lose money to the government or pay additional tax. So I think the better route would be, if you're looking at really approaching that threshold, that disqualifying threshold, make a disbursement to a different exempt resource, which would be a first party special needs trust. Why do I say first party? One is that the money may have come from other resources, but this is an account that is owned by the beneficiary. It is the person with disabilities' own money and resources that is in an ABLE account. And so the type of trust, if it's going to be pulled from an ABLE account, must go to a first party special needs trust. So how do you use money in an ABLE account? Well, you can use it for any qualified disability expense. And so education, anything that's advanced training, education, support, tutoring, interest, anything that furthers an educational experience, no problem. Books, supplies, anything that furthers that effort. Housing, of course. Now, there's something special with housing, and we'll go into that in a second, that occurs only with an ABLE account. That is really important for parents and advocates and the person themselves with disabilities to know. Of course, anything health related, transportation, and other life necessities. So that could be almost anything, to tell you the truth. The only caveat is no cash, right? So if you use it to pay an expense, what does an ABLE account look like? A card? It's just, you can use it anywhere that Visa is effective. So how much is on the card? Well, remember that allocation that we talked about, that percentage? The percentage that goes into the available cash account, that's the amount that's available to be used on a Visa. So be careful if you're giving that Visa to somebody to be used, to know how much is available in cash, because you could literally go to a dealership and go buy a car with that Visa. So just be aware that that account does have to be managed, and you have to look at that. What happens if there is an unpermitted distribution? Well, It doesn't make an ABLE account countable. It doesn't poison the well for SSI purposes, which is good. What does the Social Security POMs say? So what are the POMs? Those are the Social Security policy regulations that govern the SSI program. And that's the language that Social Security workers, that's their language that they use. And so that is their guide that they rely on as to whether something is appropriate or not. So first, even if it's an unpermitted distribution, it doesn't count as income for SSI purposes, which is really important. And we'll go through those rules and why those matter. A distribution from an ABLE account is not income, but a conversion of a resource from one form to another. This is really important when we get into why housing is such a unique proposition to be used in an ABLE account. Don't count distributions from an ABLE account as income of the designated beneficiary, regardless of whether the distributions are for non-housing QDEs, housing QDEs, or non-qualified expenses. So those are really important. Why? Because if housing, and I'll get into this rule a little bit more detail, housing expenses that are paid for by anyone other than the beneficiary reduces their benefit if they're on SSI. So it's a super important rule. Using ABLE accounts to get around that is incredibly important for both professional trustees, family trustees, and just families in general. What happens when the beneficiary passes away and there's money left? Well, the federal law says there must be a payback to the states for their Medicaid benefits that they have paid out on behalf of that beneficiary. There's a priority of claims, priority of payment with any balance, but Michigan's current policy is that they are not enforcing that payback provision. And that has been their position from day one. Now, that is not codified. That is a policy that they have chosen to take at this time, which could change at any time. And so, if there's a significant change in that, you better believe we would have some sort of outreach or some sort of alert to let parents know. So how does an ABLE account compare with a third-party special needs trust? So a third-party special needs trust is a trust that is created by anybody other than the person with disabilities, with anything other than the person with disabilities money. So the big question is, whose money is it? It is the person with disabilities for an ABLE account. So whose money is it for a third-party special needs trust? It is anyone's but the beneficiaries. So crowdfunding, parents planning for a child's inheritance, grandparents, siblings, aunts and uncles, grandparents, any family member who wants to be generous to another family member who has disabilities is going to set up a third-party special needs trust. An ABLE account can only be set up. There's all these parameters. So I'm going to let you go. You're going to have access to a PDF to these PowerPoint slides, but there are some differences between an ABLE account and a special needs trust. Using an ABLE account does not negate the need to create a third-party special needs trust. As we talked about, an ABLE account is very limiting on the amount that you can put in per year and the total value of the assets. A third-party special needs trust has no such cap. You can fund a third-party special needs trust with as little money as you want and as much money as you want, up to tens of millions of dollars. That will also allow someone to continue to qualify for public benefits if they need them. And so, vast differentiation. Someone can have more than one third-party special needs trust. I think the record I've ever heard of for a single person is 10 different trusts. Why? Different family members. And if there's money left in that account, they want it to go different places. And so they set up different trusts. And so that's totally allowable. Remember, ABLE account, you can only have one. The other important thing is what happens when someone passes away. Well, potentially there's a payback on the ABLE account, depending on what state you're in and what the current policy is at the time of the passing. With a third-party special needs trust, it goes to family. There is absolutely no Medicaid payback on a third-party special needs trust. How do we evaluate different programs? So we've talked about that. Most ABLE programs do not have a residence requirement, or there may be some incentives where if you're a non-resident, you may have to pay more to, as an ongoing fee to have access to another state's ABLE program. But this is the national website that compares and contrasts, and it is kept up to date pretty well as to what's available in different states. I actively use Michigan's ABLE program, and it really is easy to use, easy to set up, and you can link it directly with bank accounts. So I have it linked to my personal account. I have it linked to my daughter's checking account, so I can very easily transfer money and distribute funds to her if need be. Usually, I don't distribute money directly to her ABLE account, to her checking account. There are specific rules about that, right? We talked about that. No cash. I generally don't like cash, but I need to occasionally fill up her ABLE account or contribute money there. And so if we're talking about gifting during the Christmas season or any other time of year, this is an excellent way to do so. And they can use it for, again, anything that they need, wherever Visa is accepted. And so what are some of the planning strategies that we use? One is that you can distribute from a special needs trust to an ABLE account. So I said in the very beginning, the ABLE account really opened up opportunities for trustees to be able to safely distribute money so that someone could buy things at the point of service, someone who's the beneficiary of a special needs trust. For instance, you're going to buy glasses, that aren't covered by insurance. How do you do that? Or you want glasses and some like regular sunglasses and sunglasses that are prescription. Well, how do you pay for that? Well, you can use an ABLE account for that. The trustee would simply make a distribution to the ABLE account, and then the beneficiary or their advocate, whoever's helping them, can pay for the glasses or whatever that service is right at the point, right at like anywhere else that will accept Visa. Other examples are clothing, things that have to be tried on, dental care, furniture, any of those things that you would need to pay for at the point of service. Really, really helpful. And it's also just an important point of advocacy to allow someone with disabilities the authority to spend, and use their own discretion to be able to buy things. So it's something that I think that neurotypical people do take for granted, and that it was really just a tremendous tool for those of us who administer these special needs trusts. It's particularly important for family member trustees to know, if you are administering a special needs trust, to know that this tool exists, because it makes life on the administration of these trusts just so much easier. It also is a viable resource for people who are trying to who must stay below that $2,000 accountable resources rule. It's very, sometimes people somehow live below their means and they need to stay compliant for Medicaid or other benefits and stay below that $2,000 threshold. And so this is a great way that an individual can certainly fund their own ABLE account if they need to. Now, here's the golden rule, just the incredible strategy that is open to us using an ABLE account that is not open in any other method. So under the SSI rules, there are different types of income. And so I kind of stole my own thunder here, where there is no ISM penalty for SSI purposes if housing is paid for under an ABLE account. And let me explain what that means. What the heck is ISM? ISM means in-kind support and maintenance. And so if you're on SSI, supplemental security income is you must meet the medical definition of disability, which we talked about. You also must stay low income, below the federal poverty limit of income, which changes every year, and that $2,000 threshold. The SSI payment that you receive, or income from the government, is intended to provide your basic need for shelter. Now, it was food, clothes, and shelter a long time ago. And then clothes became, we're not going to worry about clothing anymore. And then earlier this year, we're not going to worry about food anymore. So someone can buy you food and there's no penalty under SSI. But what did remain in place was shelter. That is the basic need that SSI is contemplated to cover. And so if someone is receiving SSI and they are receiving rent, food, and shelter for free, and this happens a lot when you have an adult child that's living with their parents. And if you are that person and you are receiving about a 1/3 reduction of your SSI, it's because your parents aren't charging rent. They're providing food and shelter for free, or just shelter for free. And so what happens is that the Social Security Administration says, oh, well, you don't need all this money then. If your shelter needs are getting met by other people, by other means, whether it's a special needs trust or a family, just because they're not charging rent, then that is a type of income by Social Security called in-kind support and maintenance. And so they're going to reduce your benefit by up to a maximum of 1/3. And so there's different income, like there's income that we, not too long from now, we're going to be all getting ready to submit our 1040s, right? Income tax returns. So tax and income under the IRS rules are very different for Social Security purposes. For Social Security, particularly SSI, there's 4 types of Social Security income. Earned income, which is kind of self-explanatory. Somebody's done some work and received payment for that work. Unearned income, which is huge and has implications on the ABLE account. That's unearned income, meaning it's a gift. Somebody gave you something. Somebody gave you money. Somebody gave you a gift card. That's unearned income. Deemed income, which could take a whole hour to explain anyway, but it's when someone has an obligation of supporting someone else. And there's only 2 situations where that arises. And that's between spouses, married spouses, and from a parent to a child, a minor child. A parent has the obligation of support for that minor child. And then ISM income. And so this is where if you use that money in an ABLE account to pay for rent or any other shelter needs, such as association fees, utilities, taxes, like homeowners taxes, homeowners insurance, those are all shelter costs. If you use an ABLE account to pay for that, it's as if the individual is paying for it themselves, and there's no loss of SSI. So, as I say, when we're talking about special needs trust administration, it's not so much what you pay for, but how you pay for it. And so for those of you who may be administering a special needs trust for a family member, this is huge, 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 huge. And so I encourage you to take advantage of that. Practical concerns are that, one, are you selecting the right state plan? Again, I use the Michigan ABLE accounts frequently. I find them very easy to use and set up. More than most. I've used other state plans that are, in my opinion, not as easy. You have to be able to either self-certify or be able to demonstrate that the disability occurred prior to age 26. Be aware of whether your state that you're looking at has a Medicaid payback at the end of the beneficiary's life. Be aware that someone can only have one account. If you accidentally have 2, that means that they are probably over resources. And so you'll have to close one and put it in a special needs trust or spend down. Some of the other issues is that there has to be some record keeping. So who's going to ask for this information? Well, Social Security could ask for records to demonstrate how the funds were being used, whether it's an invoice or receipt. So I haven't heard of that happening, but it doesn't mean that they couldn't. The Internal Revenue Code, the Internal Revenue Service could ask for records documenting and backing up how these funds are being spent. Again, I haven't really heard of that happening. It doesn't mean it couldn't. And so my recommendation is, if you can keep those receipts, keep them handy, and just set them aside just in case. The other is when there's available cash. So I would be careful about making sure that if you're managing this money for someone else, make sure you're deliberate about how much is available in that cash versus how much is invested and not available to be spent on that visa. Because if someone can be exploited, taken advantage of, a person with disabilities is just vulnerable like anybody else, and they may, anywhere visa is accepted, they can issue payment. And so that's just something to be aware of. The interaction between an ABLE account and a special needs trust, an ABLE account is not a substitute for a special needs trust. It is a great enhancement. And if it's a small amount of money that we're dealing with, maybe you don't have to have a special needs trust unless there's more money to be dealt with, like more than consistently than you can protect an enable account on an annual basis. Or you're fortunate enough to be running up against that $100,000 threshold. So let's talk about the ABLE account a little bit. Michigan ABLE account is robust, very active. It surpassed 57 million in assets this summer. It's third in the National ABLE Alliance as far as like rankings go. Again, I find it extremely easy to manage on a personal level. I haven't had a whole lot of pushback from clients other than when they just recently have had a little bit of an issue when they were plenary guardian of their child without specific financial authority. We've had to kind of work through some of those thorny issues. Luckily, the ABLE program was responsive to our request, which was great. Couldn't have asked for better then. So how do you establish one? Follow the link or Google savewithable.com. And you should see this. I haven't seen any other competitors or hackers, but just be aware, is it an official site, right? There are a lot of protocols. So one thing is if you are helping someone establish their own account, be aware of the IP address, because what do I mean by that? So I found this out the hard way. I shared my screen with a client and helped them set it up. So it was on my computer at my IP address, logging in and creating a username and password with a parent or a person with disabilities to be able to set up an ABLE account. But what happened was when they tried to log in themselves, because they were logging in from a different state, it triggered a security alert. And so they were able to get access to it, but it was kind of a thing. And so, if I'm an attorney and I'm helping somebody establish an account, I don't want to create a security issue or just let them know that there's going to be some security checks the first time, at least the first time that you try and log in, because it's going to be a new IP address for security purposes. So it's a secure system. And so just something to be aware of. There's a couple ways to gift to a person with disabilities on SSI using an ABLE account. And one is UGift. You don't need access directly to the in-person's account to be able to do this. And so you just go to ugiftable.com. You need their name, you need some information about them, and then your gift can be uploaded and directly deposited into that person's ABLE account. The other thing that I actually like a little bit better, one that's very easy to do, right? And it's perfect for this Christmas season. If you want to make a cash contribution to somebody, this is the way to do it. Do not give them gift cards. Do not give them cash. Do not make a check payable to them. You can make it payable to their ABLE account, I guess, and then they can send it in, using the mail system to deposit in their ABLE account. But if you own or manage an ABLE account for someone else, there is a QR code that you can just print a little piece of paper. And what that does is the person, I email that to like my parents. If they want to make a gift to my daughter's ABLE account, they can send that little QR code, that piece of paper, along with their check directly to the ABLE account. And that allows the ABLE account, the bank, to match the right ABLE account with that contribution. And so those are the two ways that you can gift to someone's ABLE account. So if you don't have that QR code, or you want to make a kind of a surprise gift, or however you want to do it, that UGift is really easy to use. And so just remember, you're limited to 18,000 this year. And so if someone already has contributed to an ABLE account, then that counts. That means that you can't gift a full 18,000 because someone has already, taken up part of that maximum. So I get this question a lot, which is, why can't I just, right? So under the SSI rules, an individual under penalties of perjury must disclose to the Social Security Administration any change in circumstances. And we talked about those different types of income under SSI, and a cash gift is unearned income. So what does that mean for someone who's on SSI? Well, unearned income has direct consequences to the amount of their monthly benefit. So it's not just cash, it's cash or in kind, which means gift certificates to anywhere, like Sephora, for food, for all of those things. Gift certificates is like giving cash to them. And technically, under penalties of perjury, that person must disclose that to the Social Security Administration. So what happens if you do that? For instance, do not transfer cash to someone's checking account, especially this time of year. We see that a lot. Don't do it. Why? Because the first $20, nothing happens. There's no impact on their government benefits. $20 is free. No big deal. After $20, though, it's a dollar for dollar reduction of their SSI benefit until the benefit is lost. So the maximum federal benefit for this year is $943. And so it may not be your gift that necessarily eliminates their benefit, but the collective gifts from everybody at their whole family this time of year, that could eliminate their benefit. And it doesn't happen the month that they receive the money. It happens later. Just don't do that. This is a better way to do that. If you're going to buy something, if you're going to give, be very generous and you want to give cash, do it through an ABLE account. So let's say that they receive a bunch of money in the month of December, and now they're over $2,000 on January 1st. So one, they've lost December because they're over income. So they've lost 1 month of income. But now they're also losing Medicaid because they're over the $2,000 resource limit on January 1st. And so just be mindful. It's great to be generous, but do so in a mindful way if you are being generous to somebody with who's on SSI in particular. New resources and new developments in the ABLE world. This is how you can find out more and just to keep up to date, or subscribe to our YouTube channel, and we'll make sure that you are on top of things as they develop. So we have some great income limits and some new opportunities are coming up in 25 and certainly in January 2026. Feel free to indicate any questions that you might have. What about somebody who's on SSDI? That's a great question. So someone who's on SSDI, that is not, those are much looser rules than SSI. SSDI is not means tested. So that means that they could win the lottery and it won't disrupt that SSD, that income benefit. And SSD is tied with Medicare, and those are called entitlements. And so you could win the lottery and not disrupt those benefits. Where it does have an impact is on Medicaid benefits. And there's different types of Medicaid benefits. There's Medicaid for healthcare coverage. Okay, that's the doctor visits and things like that, and like the ACA Medicaid services. But then there's Medicaid programs that provide attendant care and we call those waiver services, or CLS services, community living support, and those have income limits. And so if somebody is receiving income, again, it must be declared, and that will directly benefit and impact someone's Medicaid eligibility because of the income to the Medicaid program. And it may eliminate their attendant care. So don't do that. Give to an ABLE. No gift cards, please. Gift to an ABLE account, and wrap up the QR code or something that represents what you're doing in a nice package. And then maybe plan an outing where they can go spend that money, like whether it's getting your hair done or shopping or whatever it is that you're going to do. It really does help to empower that individual. And so how should gift cards be declared or recorded? It sounds like it will affect SSI. Best way to handle it. Sorry if I missed your answer previously. No worries. So that's a great question. The technical rule is that those are counted as unearned income. And so the reality is, do people report every time they get a gift card? No, but my job as a lawyer is to help keep people in compliance with the rules. So I will never tell somebody that it's okay not to report that. Okay, so you must report it. It's technically unearned income for Social Security purposes. And so how do you report it? I would just give the gift card back and just say, we can't take this. Gift to the ABLE account instead, please. Or take this individual out and then you pay for whatever you're going to pay for. Don't give it to this person to then trigger unearned income. So that's the technical rule. And then did I say using Michigan ABLE for housing is the best way to pay for housing or mortgage? If someone is on SSI, SSD, or on Medicaid, then yes, using an ABLE account in particular for those benefits is incredibly valuable. especially if somebody's on SSI. It will prevent a loss, a 1/3 reduction of SSI. Now, somebody, just to be a little more confusing, right? Because these are government benefits, this is a very complicated area. Someone can qualify for both SSD and SSI at the same time. How does that happen? SSD is Social Security disability based on wage contributions, whether it's the working individual themselves, the person with disabilities, or it's their parent because they were disabled prior to age 22. If that income is low, then SSI is supplemental security income, can supplement that individual's income. And so how do you know? Well, SSI is paid on the first of the month. SSD is paid on the third of the month. And so that is also a clue as to what type of benefit that person makes. And so it's quite possible that if someone is on that supplement and they qualify for what we call dual eligible and they qualify for both benefits, if a trust or someone else is providing free shelter or paying for that shelter, then they could lose the entire benefit, not just a third. So if you only qualify for $300 of SSI, you could lose that whole benefit because it's not 1/3 of the $300 that you get. It's the whole. It's up to whatever a third of 943 is. Don't make me do math in public, but it's like $365 or something like that. So just be very careful about. That's why I always use an ABLE account if possible. Another question: if the person with disabilities lives with a parent and the parent charges for rent paid through SSI, should that money go through the ABLE account, meaning the income and expense goes through the ABLE account? No, it doesn't have to. If you are charging rent to your child with disabilities, and you're charging it directly against their SSI, that's fine. Just make sure that you're charging them at least $350 a month. There's no loss of SSI because they're paying rent, right? They're paying for their shelter, or at least contributing to their shelter. And so there's no loss of SSI there. It's where you aren't charging rent, or more often, a special needs trust is supplementing to make sure that the person lives in a safe and appropriate housing. Maybe a condo or association fees. Maybe they got the condo or bought a condo, or they received a condo from parents, or parents bought a condo and they're letting that person live there for free. And there's still taxes, insurance, and they're providing those other shelter costs, association fees, utilities, those all count. And so if that's the case, and parents are either supplementing or a special needs trustee is supplementing, use an ABLE account for that to prevent any reduction of SSI.
What happens to MI ABLE funds when beneficiary dies?
So our current policy in Michigan is that the state is not going to go after reimbursement, or what we call Medicaid payback. That is our current policy in the state of Michigan. That could change at any time, but there's no indication that they're going to change that. But if you're not establishing an ABLE account in the state of Michigan, check very carefully, because different states take different takes on that. And any leftover money would go to reimburse the state. So be careful, be a good consumer, and go back to that resource that I gave you where there's a compare contrast on the national level as to how different states run their ABLE programs.
How do we get the IRS form to self-certify?
I think you just Google. Google's your friend. So with that, I think we're going to end for today. If you have any supplemental questions, or if there's content or something that you would like us to address, please leave it in the comments or contact us directly, reception@michiganlawcenter.com, and we'll make sure we cover that in our next webinar.
Thank you, everyone, for joining. Have any questions, you could call our office or email reception. But yeah, have a great holiday season. Bye, everyone.
Everybody. Thank you.